a very warm welcome to all of you to our session today. So my name is Hang Tu Vu, and I'm a Senior Financial Sector Specialist from the World Bank Crisis and Disaster Risk Finance Program. And I am the moderator for the session today, together with my colleague Alastair Norris. So our session today is on the next generation flood modeling for financial resilience and our learning from the SEADRIF experience. We are very privileged and excited to have, distinguished speakers from various institutions joining the event today. And thank you very much to all of you for joining the session. And we look forward to your presentation and discussion. I would like to invite So-Hoon Kwek, who is the chairperson of the SEADRIF Insurance Board of Directors, to give the introductory remarks for the session today. So So-Hoon is probably no stranger to many of us here. She's formerly an executive director at the Monetary Authority of Singapore, and also she has been with SEADRIF, for the past 2 years, as one of the founding directors for the company. So without further ado, I would like to invite So-Hoon to give the remarks for the event. Thank you very much.
Good afternoon. Welcome to this closed-door session. Our title for today's session is Next Generation Flood Modeling for Financial Resilience, Learning from the SEADRIF Experience. This is a technical session to discuss SEADRIF's flood model and future enhancements. Our agenda is Introduction by Hao Su-Hoon, that's me. I am chairperson of SEADRIF Insurance. There are presentations from SEADRIF Insurance and representatives from our key partners. There will be a break of 15 minutes, after which there is a discussion moderated by Ms. Hang Tu Vu and Alastair Norris, both of the World Bank. The session will have a wrap-up by Gary Rinsat, SEADRIF Insurance, and Ms. Hang. This is a technical session, and the purpose is to discuss the SEADRIF flood model and future enhancements. Following the successful placement of the first flood insurance product for Lao PDR, this session will discuss future design requirements for the flood model and platform in support of future insurance products for SEADRIF member countries. The session will also explore the market's requirements for developing a future flood model, ensuring technical feasibility and acceptability by the insurance industry. The session is moderated by Ms. Hang and supported by Alastair, both from the World Bank Crisis and Disaster Risk Financing team. Presentations will be in the order of, firstly, SEADRIF Insurance Board Member and Executive Director, Gary Rinsat. Secondly, it will be by Calculation Agent, JBA Risk Management, Paul Macy, followed by Insured Lao PDR, Ministry of Finance, Deputy Director, Mr. Somsay Kubvandi. We then have Reinsurance Broker, Guy Carpenter, Representative, Justin Ward, followed by James Park from Lead Reinsurer, New Re, and finally, Mr. Takayuki Ishii from Mitsui Sumitomo Insurance. Gary will now start his presentation.
Hello everyone, my name is Gary Rinsat. I'm an Executive Director of the SEADRIF Insurance Company. My aim in this short presentation is to bring you up to date with where the SEADRIF Insurance Company is at the moment and to give you some pointers as to what the future might hold. As you know, the Cdrif Insurance Company was set up as part of the SEADRIF initiative by the Asian +3 Forum. The aim was to assist in building financial resilience in the face of climate-related disasters and to provide quick liquidity in the event of such disasters happening. It was set up as a pooling platform, initially by way of facilitating access to reinsurance. In February 2020, the first policies, which were policies covering flood risks, were issued to Laos and Myanmar. Unfortunately, Myanmar was unable to continue with its policy, thus leaving Cdrif currently providing an insurance policy to Laos only. That policy has two sections. The first section is a parametric insurance based on pre-agreed triggers and is governed by the Cdrif flood risk monitoring tool. The second section is what's called finite insurance, and that covers losses falling outside the parametric policy and is as laid down under the Laos disaster management procedures. To date, no payments have been made under either section of the policy. Cdrif directors are holding regular meetings with representatives of the government of Laos to try to ensure that the policy meets the needs of the government of Laos. Discussions are being held with other countries about the possibility of their taking out similar flood policies. But any such policies would require further developments of the flood risk monitoring tool because the original policies were designed specifically for Laos and Myanmar. In a new development, Cdrif is assisting the World Bank in investigating the possibility of providing public asset disaster risk insurances. This is very much in the initial stages, and the future of the project will very much depend on the wishes and appetite of governments in the region for such insurances. Cdrif's role is to assist in advising on possible financial instruments, particularly insurance, and to advise on possible structures under which to operate such instruments and insurance products. Of course, any such project would be in response to the needs of the sovereign entities in the Pacific region. I hope that gives you an update and indications of how we might develop in the future. And I very much look forward to participating in the subsequent discussion. Thank you very much indeed.
Thank you very much, Gary, for your sharing. So the flood risk coverage for Cdrif was underpinned by the flood risk model and platform. So how this model works, so we are very pleased to have Paul Mazie from JBA Risk Management with us today. Paul is a catastrophe and disaster risk consultant with JBA, and he will share with us the technical aspects of the first SEADRIF flood model, including the Earth observation element and how calculation of the impact is performed. Paul, over to you. Thank you very much.
Hello, my name's Paul Mazie and I work for JBA Risk Management, and I'm going to present a brief overview of the technical implementation of the SEADRIF flood impact monitoring. To give you a little bit of context, the models and the technical implementation were carried out over 2 years leading up to implementation. The work was done mainly by Deltares and CIMA and focused initially on 3 countries in the ASEAN grouping, Laos, Myanmar and Cambodia. And then when it came to final implementation, the system has been put in place for the current monsoon season, so 2021-2022, for Laos PDR. JBA came on board to the project in late 2019 to help with the implementation tasks and to act as calculation agent to SEADRIF Insurance Company. There are 2 main components of the modelling of flooding and then also a web interface that forms part of the whole system that's been put into place. So there's a risk profiler, which is a static module that contains data that's pre-calculated, and the near real-time flood analyzer, which is the component that does the monitoring of the flood situation, and then the data from these is provided to end users through the web interface. So to break that down into a little bit more detail, the risk profiler was used to calculate flood impacts from pre-simulated scenarios. This was done by identifying the main flood driver for areas through the region, as you can see there. And the idea is that each of these regions is dominated by a particular flood driver, whether that's fluvial or coastal flooding. This approach was used because of the computational demands of running a flood model every day and then also running something like a catastrophe model on the end of that to calculate impacts. So this approach means that there's a large catalogue of pre-calculated flood events from which the current event can be calculated. So how that works day to day in reality. So Deltares run a hydrological model for both the inland flood and also coastal flood on a daily basis. These models have been developed specifically for the regions of interest. They also take in available gauge data where possible, and then the model is also combined with satellite data or EO data. This is from the Sentinel synthetic aperture radar instrument. What this allows is to identify flood extent even where there is cloud cover. And then the idea is there is a weighting of the flood extent from these 2 different data sources, the model and the satellite data. And then those are used to determine the nearest match within the pre-calculated scenario. So this is the way of identifying the number of people expected to be affected for the current flood event that's being experienced. The system was implemented operationally in February 2021 and is being supported on an operational basis by CIMA. JBA worked with CIMA, Deltares, and also with a lot of support from SEADRIF Insurance Company, the reinsurers and the World Bank to put in place the post-event loss calculation, which is the detailed instructions that describe how the scheme will be managed on a daily basis, what the communications are between the different parties, and how an event will be identified and the actions around that. So there's a 21-day trigger window, and then if the trigger is exceeded in that period, there's a number of different actions that will be taken to ensure that all of the data used is accurate, and to handle any situations where there is missing data. So for the season so far, I'm just going to show two different events and how they impacted. So in June, we saw some significant impacts from tropical storm Kaguma, which struck to the north of Laos. This came quite close to triggering a payment based on the overall number of people affected, and you can see the output on the right hand side there from the tool, but though that trigger was not quite exceeded by that event, in the end the number of people did not exceed the trigger level. And then later in the season, in September, there was another tropical storm event which calculated some more localized impacts in terms of more surface water flooding rather than river flooding. So this did not show on the system and did not exceed any thresholds, but still had local impacts on the area.
Thank you, Paul, for the presentation. And next, I'd like to introduce Mr. Somsai Kyawandi. He's the Deputy Director of the Insurance Department in the Ministry of Finance of Laos, PDR. And as you know, Laos, PDR is the first beneficiary country under SEADRIF. Mr. Kyawandi will share some of his thoughts about, the flood risk model and the Laos coverage, and his thoughts about what the model can be improved in order to benefit the countries, the insured country. Over to you, Somsai. Thank you very much for joining us.
Good afternoon, ladies and gentlemen. My name is Somsai Kyawandi from Laos PDRs. It is my great pleasure to be here as a representative from my department as Ministry of Finance to share with you the experience on Cdrif insurance for Laos PDR. The Cdrif insurance for Laos PDR is a pilot project support from the World Bank, and it is the first anti-risk financing and insurance instrument that Laos PDR used to manage the disaster risk in the countries. Laos PDR successfully purchased the 3-year coverage Cdrif insurance from the Cdrif insurance company in February 2021 this year. After the years of preparations, the coverage has two components, which are finite and also the parametric component. The finite component covered the small natural disaster risk as defined in the Article 3 of the Law on Disaster Management of the Laos PDR. And we can receive the payout quickly, approximately about 5 working days from the day that the company received the notice of loss from us. For the parametric component, cover flood risks. This here is the medium and severe flood, and is underpinned by the Cdrif flood risk monitoring tools. The Cdrif tools is an innovative instrument, and for the first time, fill with the gap in the risk modeling for Laos PDRs. We have never had any country-specific model, especially in the public sectors. The model enables the insurance coverage through which we can observe the near real-time loss assessment, and the Laos PDR can receive the payout quickly also, approximately 10 working days after the confirm if the loss, if the fast loss had triggered the points. This quick payout will be very helpful for us to reduce the adverse social and economic impact of the countries. There are a couple of areas I think the Cdrif risk modeling capacity can be expanded for and improved to help Lao PDR better manage the financial impact of disaster risk. First one, expand beyond flood risk to cover the perils to cover other perils such as typhoon, droughts. These risks threaten the life and livelihood of our people, production and productivity of our business, and stability of the countries. Within flood risk, expand to the risk to take account the flood risk and other type of risk and diversify typical terrains. Consider other types of insurance of interest such as public assets, residential assets, and agricultural assets, where we think that this will be important for us in the future. And if we have other insurance to support this, this will be help us in the future. Lastly, link to the future technology to facilitate more efficient claim handling. Yes, this is my short experience sharing on this one on this event. If you have anything, please let me know and we can have more discussion. Thank you.
Thank you very much, Somsai, for your sharing. And next in our session today, I'd like to introduce Justin Ward from Guy Carpenter. Justin is a Senior Vice President at Guy Carpenter who led the Cdrif placement, and he will share his thought about the Cdrif experience with the flood model and the interaction with the market and how the first insurance product was placed based on the model. So Justin, over to you, and thank you.
Thank you, Hang. Before I get started, can everyone hear me? Thank you. Hang, thank you for those kind words of introduction. And of course, to my fellow panel participants, thank you for adding a richness to the discussion around Seadrif, the Seadrif Insurance Company, and innovation in delivering solutions to address natural disaster-related insurance gaps. My name is Justin Ward, and with my colleague Apurv Dabrul, we were heavily involved with the board and management of the Seadrif Insurance Company in the development of their reinsurance and placement strategy associated with the recent launch of the Lao Flood Parametric Solution. I have a limited amount of time today and wanted to cover 5 key reflections Guy Carpenter has related to the origination and placement of the program. Can I please next slide? Hopefully it's coming. Thank you. Firstly, this solution and the design of this solution was the result of breakthrough innovation. This was not about tinkering with a product already on the shelf or adding bells and whistles to a vanilla insurance product. This product was unique from the way the stochastic model was built. The product was unique given the large number of contributors to making the product work and bringing it to market. Deltares, CIMA, the EU Space Agency, the European Centre for Medium Range Weather Forecasts, and of course, the World Bank. All these parties bring a unique set of capabilities and contributed to the build. Secondly, the stochastic model and step trigger mechanism were interlinked, helping negate the basis risk with key factors, for example, population density, placed in escrow at commencement. And finally, a web-accessible trigger monitoring mechanism linked to the stochastic model. Secondly, this was a unique solution build that involved sourcing capabilities from non-traditional, and I mean non-traditional reinsurance or insurance avenues. This was a positive from 3 angles. It injected new ideas and thinking to help us solve some pressing issues. It challenged our own heuristics from an individual and industry perspective. And it introduced capabilities to our industry that would not necessarily be obvious to us, but have a large contribution to make. Thirdly, reinsurers, who were very patient. This took us just over 18 months to bring to market with a number of iterations. These reinsurers were happy to peer review the concept and product so as to ensure its feasibility and sustainability from a commercial perspective. And finally, these reinsurers were active participants, not only as capacity providers, but as partnership participants. And I know many of them are on the call today. Fourthly, uniqueness. Bringing the solution to market was non-linear, a result of breakthrough innovation. It required all parties to be patient. It required parties to challenge their own view of risk and view the perspectives of others. It required parties to buy into the ambition of SEADRIF and ensure the Lao solution could be delivered to market. And finally, focus. Focus to drive outcomes. Focus on addressing insurance gaps that provide a stepping stone to commercialisation and full ownership by the private sector. In this situation, it required an eye for the outcome. As a former CEO of mine used to say at the start of a project, write the press release today. This made all parties become crystal clear on what the outcome looks like. And of course, it requires orchestrating the outcome, owning the coordination of the stakeholders and the product delivery value chain to ensure an eye for outcome, an eye for commercialisation, and an eye for delivery. Thank you for your time today. Hang.
Thank you very much, Justin, for your insightful reflections. And next, as a very important part of the SEADRIF experience is with the reinsurance markets. And we are very pleased to have, James Park, the CEO of Munich Re Southeast Asia, with us today. So James is speaking on behalf of Munich Re, who is a lead insurer for the flood risk reinsurance coverage. James, over to you for your presentation, please. Thank you.
First of all, thank you for the privilege to share Munich Re's perspective on the SEADRIF insurance product and thoughts on how to improve the model for future market acceptance. My name is James Park, CEO of Munich Re Singapore, Southeast Asia. At Munich Re Group, we've been involved over the past decade in development of insurance solutions aimed at providing emergency relief for the affected population in the aftermath of natural catastrophes. Flood has always been perceived as one of the most challenging perils in this context. The SEADRIF risk transfer product and flood modeling is innovative and a major contribution to making flood risk insurable. For our parametric insurance product to fulfill its value proposition, funds on premium as well as potential insurance payouts are to be spent efficiently. Payouts have to bridge liquidity gaps when other sources of funding are constrained, while premiums have to be at a fair level. This means that on one hand, payouts have to occur when required, at the required level. For that to happen, the basis risk of the product has to be reduced to a minimum, ensuring high correlation between triggered payouts and required funding. On the other hand, it means that risk takers have to feel comfortable with the risk they are taking on, and that there has to be a competitive pricing, bidding process such that the market sets the risk adequate premium. This leads me to three aspects in terms of the insurance product, the flood model, and future evolution thereof that I'd like to touch upon today. Accuracy, complexity, and uncertainty. First of all, accuracy. Accuracy of the model is key in reducing the basis risk to a minimum. To that end, we appreciate the quality of the flood model and the way that the product uses different data sources in the modeling process to absorb the biases. We particularly support the innovative integration of Earth observation data as an integral part of the modeling, observing effects on the ground of an event. For future development, we would like to investigate if the Earth observation components can be strengthened. That is, more frequent observations can be integrated to make sure that the peaks are observed. Complexity. While the risk transfer product and the structure itself is straightforward, complexity stems from the underlying flood modeling and post-event loss calculation, also called PELC. By complexity, we mean multiple data sources, multiple data processing algorithms, and multiple parties in the PELC procedure. Flood is a complex peril, and in order to reduce basis risk of a parametric flood product to an acceptable level, we believe that this complexity is necessary. And we also believe that the reinsurance market can handle the complexity, allowing for competitive bidding processes. The important thing is that the PELC process is consistent and sound, and that the PELC output is transparently shown in the Cdrif flood monitoring tool. Uncertainty. While risk takers like risk, we don't like uncertainty that much. In terms of future evolution of the product, this is one key aspect to consider. There are few sources of uncertainty in the Cdrif product. One source of uncertainty is due to the novelty of the transaction. The product and the model has not been tested and observed in real time. Another source of uncertainty is the use of different data sources and updates of data sources along the modeling process. There are matching algorithms that also lead to uncertainty about the behavior of the product. Uncertainty will naturally reduce over time as new data and longer and more robust time series becomes available, and the model, the PELC, and the monitoring performance can be observed in real time. It is important, however, to further reduce uncertainty where possible by transparency and supporting data and analysis. In summary, we believe that accuracy is the key for efficiency and the value proposition of the product. 2, the resulting complexity can be handled by the market. 3, uncertainty should be reduced where possible by transparency and supporting data. Cdrif has managed to find a correct balance to start with, and we are confident that it will further evolve with experience gained and naturally with the broadening of the geographical scope. Again, thank you for this opportunity to share our perspective, and we look forward to further dialogue and improvement in the Cdrif scheme. Thank you, everyone.
Thank you, James, for your presentation and your sharing about the experience with Cdrif. And we are also pleased to have another representative from the reinsurance market from MSI in Japan. I'd like to invite Ishii-san, who is the head of planning at MSI Reinsurance Department. Ishii-san, the floor is yours, and thank you for joining us today.
First of all, I am pleased that the Cdrif had launched the low PDR flood insurance scheme in February this year. This is owing to the endeavor of all related parties to support this region from vulnerability for flood and expedite recovery from flood loss events in future. I strongly expect Cdrif insurance scheme would expand to the other regions in ASEAN on a step-by-step basis. Today, I would like to talk about our thoughts on requirements of model for future market acceptance. As you are aware, risk model is a key for successful risk transfer, not only to the global insurance and reinsurance market, but also to the investors and capital markets by providing proper risk information on the risks to be covered. Our industry has a lengthy history of developing catastrophe risk models, and it should be worthwhile to mention our general expectations, such as coherency and comprehensiveness, accountability and transparency, reduction of basis risk, data management, and continuous improvement. Firstly, coherency and comprehensiveness. Models should fulfill coherency and comprehensiveness. A model should be consistent with the relationship between input data and its outcomes. If we input more vulnerable data, the model should output higher expected loss and probabilistic loss figures. We should also consider how the model outcome fits to the historical events and its actual loss. Each company should evaluate validity of the model and communicate its own view to SEADRIF and the broker, so that collective intelligence can improve the quality of the model. Secondly, accountability and transparency. Model is a technical tool, and it tends to be a black box for most of the people. But a model should consider accountability for the components and technical features. We occasionally see the changes in exposures, which cause big difference in modeling outcomes, and we should explain the background of such differences to the management to maintain our support. For that purpose, a model should be transparent for its technical information as much as possible. Thirdly, reduction of basis risk. To speed up insurance payments, parametric trigger is useful for the affected people and local economy. In addition, parametric trigger can provide higher transparency to the insurer and the reinsurers. On the other hand, parametric trigger may cause basis risk, which is the difference between the parametric loss amounts and the actual loss figures. Therefore, it is fatally important that the model reduces the basis risk by capturing important loss amplification factors. We should also note that the low PDR flat insurance scheme incorporates features to minimize basis risks, such as using number of affected people for loss calculation, combination of finite risk components, and the parametric insurance component. Fourthly, data management. Data is source of insurance business to evaluate the risks properly. It is important to collect detailed data as much as possible to develop a reliable model. When it comes to the flat risk, just a few hundred meters distance could cause a huge difference in actual losses. Flat monitoring is also key to evaluate actual economic losses in specific regions, so that the local government can consider necessary support as needed basis on a timely manner. Nowadays, there's a lot of the data sources we can rely on, such as satellite image, GPS data, flat maps, and so on, and I believe we can achieve leapfrog development by using them. Global flood forecasting information system data used in low PDR flood model is also important data source. Lastly, continuous improvement. A model is never perfect since it is a miniature version of complicated real world. Therefore, we should pursue the best model at the time. But we should be also humble enough to review and refine the model continuously based on the new information available. Climate change tends to affect developing regions where insurance coverage is not prevalent. Therefore, public-private partnership like SEADRIF is important to fulfill the protection gap between economic loss and insured loss. Risk model is one of the key factors to promote public-private partnership, and I wish our industry can contribute to the model development as well. Thank you for your attention.
Thank you very much, Ishii-san, for your presentation. And we have heard all the sharings from our speakers, and now it's the time for Q&A session. We have, a chat box and also Q&A where you can post your questions, and please feel free to send your question to us. Now I'd like to invite my colleague Alistair Norris to join in this Q&A session.
Thank you to all the speakers, and thank you to everyone for attending. I think there's sort of 45 to 50 of us online at the moment. So what I'm hoping now is that we start up a bit of a discussion on some of the more technical aspects. But before we do that, I'd just like to see if anyone has any questions on any of the presentations at this point in time. If you do, then feel free to either send them across in the Q&A functionality or raise your hand, and we will then get Nelly to unmute. Unfortunately, as part of the WebEx platform, we can't have, doesn't allow people to unmute themselves and speak, so we'll need to go through the sort of, the raising the hand and then Nelly unmuting. I've noticed that there are a couple that have come in on the Q&A, so it might just be useful if we can go through those to start with, and then we'll head into the discussion. Just let me have a quick read through. Okay, perfect. Thank you very much for the comments. I think we'll probably come to them during the discussion, so I won't do that at the moment. Maybe just if I ask Nelly, has anyone raised their hand to ask a question, or shall I continue? I'll assume that there aren't any questions at this point in time, but Nelly, do let me know if any come in. So a couple of things before we start out on the discussion. So firstly, would like this to be a technical discussion concerning the model and also the flood platform that's being used, and happy to get into sort of the more technical aspects of how the model was built and how it's being utilized. I think we have the right people on the call to dig into those things. But one of the pieces that would be good to come out of this meeting and this workshop really is to understand from the market side, from both insurance and the modeling parts of it, what enhancements are required to simplify the insurance placement going forward and improve the model and or the tool for any future insurance placements. We did have some issues in bringing this to market the first time around, and so hopefully with those on the call, and we can explore some of those and also look to see what enhancements would be possible going forward. As I said, unfortunately, with the functionality, we'll need people to raise their hand, and then we'll come to you for your opinion. And what we're going to do is start with a sort of short-term discussion, and then we'll have a break for everyone just to sort of get up and go away for 10-15 minutes, and then we'll come back and have another discussion before wrapping up. That's the general gist, but we'll see how we go and see what progress we make. So maybe the first up, is there anyone on who would like to make any initial points on either the model or having been involved in, from the insurance side, on investigating the model at the time that the placement was made? Are there any thoughts immediately on improvements or enhancements that would be required going forward? And Nelly, I just ask you, if anyone does raise their hand, then please just unmute them in the order that they raise their hands, and we'll go from there. Okay, it looks like, no, go on, someone has now raised their hand. Great.
Yeah, it's a good opportunity for me to discuss about some technical challenges we can consider for future. So that, I'm quite happy to have my ideas to open in this opportunity. So actually, this discussion can be slightly technical, but actually, I think there could be 3 major changes we can make to improve the models for future. So let me introduce one by one. Yeah, actually, firstly, regarding the stochastic flood risk model, the model uses correlation coefficient derived for all flood drivers observed in 35 years history. In more details, the exceedance probability distribution for extreme discharges was derived from the frequency analysis of each river by fitting Gumbel distribution, and they are integrated with each other based on the covariance matrix. So this should be quite acceptable, to say honestly. But on the other side, maybe we can also consider using Copilot for consideration of regional correlation. And the other solution could be generating probabilistic catalog of rainfall distribution based on the analysis data and calculating the river discharge based on that. But it may cost significantly to develop such models. This is the first point I may raise. The second point I may raise is regarding flood monitoring tool for fluvial and pluvial floods. Actually, the model generates flood maps based on relatively static flood analysis. That means the model considers assumptions of slow increase of uniform rainfall over all sub-areas and elevation data from the river. But this should be accessible, but we can consider more dynamic flood analysis as well. And I have talked with our technical team, and they advised me that one solution could be to use two-dimensional shallow water wave equation for inundation analysis. That's the second point. And the third point is regarding flood monitoring tool for coastal flood. So actually, model documentation also mentions that the model neglects the effect of the line elements like levees and elevated loads, and it can significantly affect the flood pattern as well. And I think it could be kind of a limitation by using the MERIT DEM 90-meter resolution. And it could be difficult to resolve at this moment, but in future, if we can have more detailed information about such details of the land usage, it can improve the model's quality further. So that is the third point, and that is my current idea how we can improve the models. Yeah, thank you for your consideration.
Thank you very much, Takeyuki. Maybe from the modelling side, any thoughts on any of that? Paul, JBA, is probably most informed of the model here, or bring Kathy in. But does anyone have any thoughts on any of those points, or want to pick up other points?
I'm happy to answer that. Can you hear me?
Yes, we can, Paul.
Yes, excellent. Okay, thank you for those points, and also for the comments in the chat as well. I think that they're all of us kind of very technical nature, so happy to take those on. So I guess firstly, just sort of worth me pointing out that there's been quite a complex process of developing this model over the last 2 or 3 years, which has started with Deltares on the flood modeling side and Chima on the Earth observation side, and then JBA has come in to help implement that process. So between the three of us, the three organisations, we're very keen to look at further developments. Perhaps I'm not best placed to discuss some of the sort of finer details of the flood modelling, but to take the 3 points that were raised, I think they're all areas that we could certainly investigate. They're things as a flood modelling firm that we're aware of, and that we would different techniques that we would consider using within a tool like this. I guess we're a little unfortunate in that we haven't seen a significant event during this year to see how the modelling performs, although we do have 2 previous seasons that we used for validating the model, although there have been some changes through that period as well, so that's not maybe a genuine test period. So we're continuing to learn on this. Specifically on the point around coastal flooding, I think that's a particularly pertinent point about the availability of defence data. It's something that's very beneficial, but it can also be a little bit challenging. It requires access to that sort of information, but I think that's somewhere where we could probably work with the local authorities and see if we can access improved information where we can identify areas that are defended and the level of that defence, and look at implementing that in the model. On the question of the satellite data, so the aim from the start of this development was to see how we could blend the 2 approaches, so the hydraulic modelling or the hydrological modeling, and also the Earth observation data. The hydrological modeling has advantages that it doesn't have, that you can run the model every day, so there aren't limitations in terms of the data availability. However, it is a model, so with any model there will always be some assumptions that need to be made and some limitations. The advantage of the Earth observation data is that it's a real-time data set. This particular product that's used can see through cloud cover, so it's not limited in areas where it's maybe still raining, but it does, as the comment here has pointed out quite rightly, it does have limitations in terms of when it's available, and this is one of the key constraints with the EO data, that it won't always be available at the time of peak flood. So something that we could certainly look at is other products that might be available to supplement and fill those gaps. And I know there's a lot more satellite data coming on stream all the time. There are then challenges around handling that data, and potentially challenges around costs of accessing that data as well. So there's obviously always a balance there. As other speakers have said, I guess ultimately it's about minimizing the basis risk as far as we can, but in a way that is that we can still feasibly produce an output every day, and at an acceptable cost as well. Thanks, Alistair.
Great, thank you very much, Paul. Sorry, I'm sort of running a million things here because of stuff. So can I just find out, are people able to see?
I can, in the meanwhile, share actually a mini review actually on what we should consider for the future, what people would be interested in. You know, like there's not so much to add actually to what the others have been saying already, but I would like to see a stronger shift towards Earth observation. I think we have the abilities now there, as was mentioned before, a lot of more satellite actually remote sensing data is available. There are also a lot of actually open source satellites that can be assessed. The data can be assessed, and I think like the idea should be to have a kind of a step-by-step change actually from a hypothetical actually flood extent map in the PAL process towards actually an observation actually of the real flood extent, you know, like by means of remote sensing. And I think we are not anymore far away from it, you know, like, and to some extent the complexity of the model is driven by the absence of these data sources in the past, you know, like, but I think we are at a threshold now where we increasingly will be able actually to directly observe what's happening. And then the other argument, which is non-technical, and I have to excuse here, certainly like the most important thing in terms of really actually improving the underlying model actually and developing it actually over time is certainly actually the growth of the Cdrif scheme as such, you know, like that it is used to mobilize more reinsurance capacity over time, that more risks are ensured, that additional countries actually are joining, and this will trigger a lot of actually attention and interest in the model and lots of contributions actually towards improving it. But I have also to state that if you wouldn't have liked actually the approach, we wouldn't have actually underwritten it, certainly, and my colleagues were very fascinated about the quality of the work that was shown here. So thank you.
Great, thank you, Michael. That's that's good input to know. Just before getting anyone to respond to that, can I just ask, can people see my screen, or is it all grayed out because of other boxes which I've got over the top of it?
I can see the screen, Alistair.
Perfect. Okay. Great. Hopefully everyone can see the slides then. I might just jump on to this part. So just jump back to EO. So yeah, I think Michael brings up a good point, and one that we observed with the placement, which is the extent to which the insurance industry is willing to accept the Earth observation part of the model, and whether the market's opinion really is on including the Earth observation data in future products, as Michael's saying, or whether actually there's a tendency across the market to just use the model. And obviously bringing the Earth observation data in, especially the way it's been done through the model that exists at the moment, means there is this difference between the stochastic model that got run originally and then the methodology that's being used for the trigger. And the two are not quite the same process because we're adding the Earth observation data in. Now, I'm sure we've all seen quite a lot of news recently about purely Earth observation products being introduced into the market, and so I think we've come quite a long way from when this model and this methodology was developed. What I think would be interesting to hear from is some of the Earth observation folks who are on the call. So I think we've got Chima, ICI, and a couple of others. What sort of what you're seeing within the Earth observation space, and also any other insurers who have an opinion on whether, from their perspective, a greater use of Earth observation would be beneficial, or whether they see that as an issue because of the sort of difference it creates in respect to the model. So yeah, if anyone does want to speak on that, please do just either raise your hand or send a message in the chat. I think, Roberto, it'd probably be good for yourself to utter a few words and first on that, and then maybe everyone else can raise their hands after that. Sorry, well, I'm just going to try and unmute Roberto. Okay, great. Roberto, you should now be unmuted. So
yeah, thank you, Alistair.
Just expanding on your point to everyone in the chat.
Yeah, can you hear me? Loud and clear
yes,
now?
We can hear you.
Okay, very good. Thank you, Alistair, for unmuting me. Yeah, basically I would like, maybe to answer. I've seen a lot of interest, in the Earth observation components, which was not there, I would say, at least 3 years ago when we started the full process. But it's true that technology has advanced, tremendously. Take into account that, for example, the system that we've been using in SEADRIF was the first one automated, I would say, Sentinel-1 based algorithm. And now, recently, we have a full Copernicus service that, is based on the same technology, and it is going to be, fully available, for everyone. So, you can imagine that the big difference, in technology that we have had, in these 3 years. There are, still challenges there. I think that, we've been working, thanks to, ESA funding, already on the side, in order to test, some possible improvements. One certainly, in adding on top of the Sentinel-1 that is now at the basis of the system, additional data sources, starting from expanding or augmenting these, from purely SAR data to SAR plus optical data in order to increase not only, I would say, detection capabilities in terms of frequency, but also, in terms of taking advantage of, the differences between the two sensors in different parts of the domains, on the domains of interest. And of course, with increasing availability of satellite imagery and different data sources, those could be included in order, to increase the frequency of acquisition and avoid, missing the, let's say, the peak floods, during the overpass of the satellites. I'm pretty sure ICI that is here, will have a lot to say there. Of course, in that case, we don't have, free data sources, but, we will have, to pay for, the source of data. But of course, it's all about, cost and benefit to be evaluated by the market. Another point that I see, in your slide, about recent improvements in the detection in the urban area. Let me say that we've been working really hard, in that area. As you know, SAR data, they do have, very, small, detection capability in urban areas. We've been working on a very cutting edge, algorithm right now, based not only on SAR intensity, but using a combination of intensity and coherence. That seems quite promising. is now under test among, few, actors in the market, RMS, Swiss Re, and others. And we are getting there. I don't want to say, it's already, it's already there to be, to be used, ready to use, in a product like this one. But it's getting there. So I think in 1 year time, maybe, we can have also, this extended capability in areas that certainly was identified as a big gap, from the Earth observation component. Well, let's stop here. Alistair, thank you for this. If any other question, is there, I would be happy, to reply.
Great, thanks, Roberto. That's super helpful. Let me, where people aren't putting their hands up, so I'm afraid I'm probably going to call people out to provide their thoughts, especially those who've been kind enough to add comments to the Q&A or to the chat with myself. So maybe Philippe from ESA, could I just ask you to make a few comments? You've put a few comments in the Q&A, and I'm not actually sure if all participants can see that or not, but it would be useful for you to expand on that to all participants, if okay. So I've just unmuted you.
Hello, can you hear me?
Yes, we can hear you.
Yes,
Thank you very much.
Just wanted to contribute from the space technology angle to say further to what was explained by Roberto Rodari. With open and free data like the Sentinel mission, you get a lot of observations at no cost. And the satellites were designed to continuously make observations. So they don't need a customer to be switched on. They're always switched on. So they have a foreground systematic operational acquisition plan. So you get images all the time, which is a very strong asset to support applications like flood response. But if you really want to go to daily observations, one should try to combine such missions with other missions. And you have made technical assessments, and with 3 satellite missions, and at the time it was RadarSat plus Sentinel plus Spot optical, you guarantee daily coverage. Or it could be the RadarSat constellation mission that can provide open and free data, but not open. They are reserved to Canadian public customers. So there should be, it's not guaranteed that any type of project can access to such data, but it's a typical example of a mission that would very well complement the coverage of Sentinel. Or you have commercial missions like TerraSAR or Cosmos SkyMed, or other SARs or ICEYE from Finland that has new space technology with SAR observation. So when you combine these missions, you can reach daily coverage, which I understand as is quite needed for this application. So that was my comment from the space technology angle. Thank you.
Thank you very much. Good to know. Then maybe if I can go to Kathy to provide some thoughts. I think probably on a slightly different topic, but I'll let Kathy expand on them. Just unmute you, Kathy. Yeah,
thanks. Thanks. Hopefully you can hear me. So yes, just for those who are here. So I previously worked at the World Bank. I know I've met many of you through the process of SEADRIF going to market. So I guess on the EO, just had a couple of points to raise and kind of bringing it back to some of the initial conversations. So there's a lot of discussion, I guess, around basis risk and how obviously that's an important part of the model to consider. And I guess in this sense, because it's a parametric product, obviously we've discussed basis risk in terms of, you know, the flooding matching the actual flooding which occurs in the country, which is obviously very important for Lao and the payout they receive. But then there's also the basis risk between it being a modeled product on a parametric basis versus what the model says. And it's interesting, obviously, with a lot of conversation here around how EO would be great to include, coming from the same, you know, conversations from the same reinsurers who are also saying, but we want to look at minimizing basis risk. And now, obviously, basis risk is a model versus trigger idea of basis risk for a parametric product is going to be larger in a sense of the fact that the model is using a stochastic event set versus the way that you're doing a triggering based on the EO. And I guess a lot of what we looked at when we looked at could you just trigger an EO was there was such a significant difference between an EO only way of triggering versus versus looking at including modeled parts. And I think for this, that's where it's important to consider the structure of the product as a dual threshold. It only has two thresholds. In a sense, the concept of basis risk here is not necessarily exactly how perfectly does it represent the flooding in the country on an overall basis, as long as it matches very well to those two thresholds. As long as you can, the payout isn't linearly increasing with the amount of flooding. That's why there's only two thresholds, because we recognize the difference about how hard it is to perfectly measure the amount of flooding. And so the idea is that it could relatively robustly distinguish between those two large levels of flooding, and hence why there's two thresholds. So I guess it'd be interesting to consider the prioritization of the developments in terms of, if we were to maintain, or the World Bank was to maintain, and SEADRIF, apologies, it's a separate company, was to maintain the two thresholds for a payout, does that change where you would consider the extra modelling needed to be looked at? Versus, obviously, if it was going to a linear payout structure, then actually the very small gradation and discretization of flooding extents would become more important. So perhaps there is a way of discussing, given the limitations in funding to develop new models as well, where that balance comes in terms of changing the structure of the product as well. So those were really just kind of my comments in terms of, I guess, the difference between making a fantastic flood model that, yes, measures flooding extremely well in a country with unlimited resources versus making a flood model for this purpose as good as possible. And I think some of that needs to relate to whether the structure needs to change as well, or keeping a dual threshold and just enhancing its ability to really determine those thresholds as opposed to a full extent of flooding. So those were just my comments really on the idea of basis risk and the inclusion of EO.
Thanks, Kathy. Yeah, good to have you in the call and provide those thoughts. Maybe just asking any of the reinsurers at this point in time whether to make any follow-on comments from what Kathy said. If there are none at this time, I'll probably just say that we can break for a 10-minute break. But let me just give everyone a minute to see if anyone puts their hand up to make a comment. No. Okay. So maybe at this time, I'll just say, let's have a 10-minute break. So if everyone can aim to be back at sort of, now it's just gone 3, so sort of 3:10 or soon after that, that'd be brilliant. I suppose from my side, what I'd ask is have a think over that break as to any points that you'd like to make. From the SEADRIF and World Bank side, I'd say that this really is for us an opportunity to get your feedback on the model, the process, and everything for when, or if and when SEADRIF go back out to market in the future. And so the more that a sort of opinion that can be given now, the better place that we're going to be when we come back to the market. We aren't going to, it's not going to be held as a definite, and we're not going to sort of hold you to your word at this point in time, but it's just good for us to get an indication from the market, from the modelers, and from everyone else. So yeah, if I give everyone a 10-minute break, go away, come back to just gone 3:10, and then we'll continue for, I think, a maximum of sort of 30-35 minutes before we wrap up. But if we don't have enough discussion, then we'll end earlier. Okay, thank you very much, everyone, and speak to you in 10 minutes. Okay, hi everyone. It's very hard to know if everyone is back or if they're not, but for the panelists, maybe if we can turn on videos when you're back, and for everyone else, hopefully you'll be back and listening to us and able to participate. So if you do have any thoughts following sort of break, then please do raise a hand or yeah, let me know in the chat, and I will come to you. I think maybe whilst I'm giving people the opportunity to do that, I would just take a moment to go through this slide. So we've got a few slides to help try and stimulate some discussion or some further discussion and get some thoughts. We've got about another 45 minutes before we have to sum up. So there's still quite a lot of time available to discuss on some of these points. I think from my side is hopefully everyone can see the slide. But what I'd like to get a feeling for on the modelling side at least is what model enhancements would really increase the confidence of the market, and also if there are any thoughts from the modelers or EO specialists on things I haven't picked up that they think might be very relevant to this. But some to go through are just a few I'll pull out really are at the moment we've got one pre-computed number affected per sub area per return period. Would the addition of more return periods or more than one pre-computed number be a benefit? Was there an issue with the sensitivity of the payout to a single sub area, and was that seen by the reinsurers as an issue associated with the product that was developed? And then some more sort of modelling specific ones, I suppose, on how the inclusion or exclusion of flood defences and the DEMs were seen. So I won't go through these word for word. You can all read those as needed. But I think it'd be good to understand if any of those enhancements or if there's anything else people saw as being an issue at the time or as increasing confidence. And then just down to the bottom of this slide are some other areas of things which I'm aware first time around, and sort of I was only involved in this modelling and product just as it went to market, but I'm aware that there were some issues with around flash flooding and urban floods and how they're included in the model. And again, we heard from Chima and Roberto earlier on, there's been some improvement in that from an EO standpoint, but it would be good to get the market's thoughts. So I suppose at this point in time and on this slide, it would be good to understand what people think and especially what any of the reinsurers think. I don't know whether Michael, yourself, or Philip, I think you're online from Swiss Re, or Steve Adriot from SCORE. So you three guys in particular know that sort of leads or taking large chunks of the insurance policy that was done, and so your thoughts would be particularly relevant, I think, on this modelling part. Just give everyone a sec to sort of take it all in. Okay. Well, if we have, if no one wants to make any thoughts on that, I'll maybe just continue through the slides and just people, just give thoughts as we go along. So I think we've discussed a little bit on the EO side and the market's interest in including Earth observation in the product. I think there were some, as Kathy pointed out, some issues with the sort of discrepancies between using Earth observation and not. And so again, any comments on that would be particularly useful. And then I think we probably heard from some of the EO guys on some of these. Maybe just where the ICI are on the call and haven't been sort of referred to a couple of times, but haven't actually given an opportunity to speak. So I'm not sure if Biggie is on the call, but if so, then I'm happy to unmute you and let you speak. in a second if you'd like to. So let me go ahead and unmute you now to allow you to say a few words on the EO side from ICI's point of view.
Alistair, thank you for this opportunity, and thank you for having me. So from ICI's perspective, we are very much intrigued by hearing what JBA and Deltares and CIMA have been doing in the space, because it pretty much aligns with what we are trying to solve as well, which is basically how do we look at floods and get the most near real-time picture of an event that has occurred. I think similarly to what was already raised by one of the speakers or contributed before in this call, when she said, you know, when we look at the flood modeling and the analysis that is available, we need to distinguish between the countries where there's already an abundance of data and where it's going to be easy to do the flood monitoring versus countries where certain data inputs are not yet at a resolution, at a quality that is really, say, at the level where it could be in other countries. So I think similarly to what the partners have already been doing and been discussing, from an eyesight perspective, we would probably have similar insights when it comes to, say, detecting the floods in the countries like Laos and then monitor those floods. I mean, we can use our constellation to really get the SAR imagery for such events, but our output is then often matched with data inputs like high resolution digital elevation model or digital terrain model in order to give the radar a context to really see the water levels. And I think this is where then, I guess, maybe the imprecision, the inaccuracy would come from, right? So I don't know if this is something, you know, Deltares and JBA have also seen, but I would expect this. We haven't tried, to be honest, to see any floods in this region, but I believe that this is one of the themes we have seen in similar countries where we probably run into similar challenges.
Great, thank you very much. Anything like Chima or Paul, do you want to say anything in response to that last point, or happy to continue?
Yeah, no, I'd certainly pick up on that, and I agree. That is I mean, that's one of the challenges of using the EO data, which is part of the reason for the combined approach that was implemented originally. I think is to is with EO data you get an extent, but you don't generally get any information about flood depth, and then we're having to make assessments of flood depth when we start to think about the impacts on whether it's the population or whether, you know, moving forward we start to think about impacts on sort of buildings or infrastructure. Then we've always got that challenge of excellent coverage from EO sources, but with no information that would allow us to link the flood to directly to damage. And then you might have areas where you're seeing very limited depths of flooding, but it's shown as flood extent, which means that then you're starting to impact a much larger population than is actually the case in reality. And I think just kind of stepping back a little bit, just to maybe put some of this in context. And I was I noted both some of Roberto's comments, but particularly what how Justin kind of talked about the process we've been through with this product and the innovation that's been brought to this, and that's quite useful to reflect on. I think that we've actually come quite a long way with this project over the last sort of 2 or 3 years, and then we are now probably in a place where there is a lot more new available technology that we could draw on in the future. So we've learnt an awful lot through this process of developing this, and not just from the technological side, but also I think between the different partners, about how to implement something that has the utility to allow a scheme to be set up and placed to the market. So I think that's a good baseline to move on from. I think both on the modelling side and on the EO side, as quite a few people have sort of identified, there are new opportunities now to enhance the technology behind this. Now that we've definitely got that, what we think is that clear view of how this will be used, and obviously the fact that it is implemented and in the market now gives us that confidence that that all parties are kind of understanding how this will work.
Great. Thank you, Paul. Okay, so just sorry, I didn't mean to go through quite so fast. So just moving on, slide onto the insurance points. I think it would be good to understand. I know there was a big issue, although I've heard about it, but probably don't know the detail of it. But the issue around exclusions and the general exclusions to policies, and in this specific case, the dam exclusion that was introduced. So I think that if there's any others, or if there's any further to be said on that particular issue, it'd be good to hear that at this point in time. I'd also be interested to hear thoughts on and what the opinion would be on different payout mechanisms, and whether changing to a linear payout or other types of payout, what the opinions would be on that, whether it would be promoted or whether actually that isn't something that the market would like to see. And then also on the final two pieces, the 21-day window. I think there are arguments to make that smaller, to make the window fewer days. And again, it would be good to get thoughts. So yeah, really at this point in time, it's any thoughts again on any of these points that's more related to reinsurance. And aware that I've got a hand up, so let me just unmute. I think it's Guy Carpenter in Singapore. So let me just unmute them for a second and go ahead and speak.
Well, this is Apurva actually here.
Right.
Yeah. So sorry, I was trying to fiddle with that raise hand, and I was not sure whether it's raising or not. So you must have seen it up and down a few times.
Awesome. Cheers.
So cheers, mate. So I just wanted to discuss the first one. I mean, the EO data. I mean, I think we are talking about these technological advancement, the innovation in the EO data. But I think that what usually happens, and what we have seen with this product as well, that, I mean, if you go back to the history where we need to validate those products and these innovative products, I think because the innovation is happening almost every day now. So, and the reinsurers and the market would like to see certain validations on these types of products. So I think that's really a critical point when we are trying to design a product. How much confidence, I mean, because, I mean, we don't have enough data, or this very innovative product is not able to, we are not able to validate that product quite well. And we have introduced that product in, we have introduced that technology into the product, it becomes an issue. So, I mean, I think whenever we are designing this product, of course, it's great to have these innovative, whether it's in satellite data or in modeling, to have there, but we have to still see after how it has performed, or that product has performed in the past as well. And that's a very critical point, and to win the confidence of the market and win the confidence of the buyers of that product. So I just wanted to raise that as well, that when we are talking about this product, we have to be aware of that. That's all.
Thanks, Apurva. Thanks. Yeah, agreed. I think it's a good point, and I think that's something that would be interesting to see. As to I know I was discussing a few months ago when this being sort of more live, is whether what the best process is to go forward, whether we look to enhance the model at this point in time, or whether actually we just see how the model performs against events as they come in over the next year or so, and potentially to build up more data, more knowledge, and allow EO and flood modeling to improve further, and then make any change at that point in time. And potentially that is one way that we could go, but doesn't necessarily have to be the way. Maybe just any other thoughts on the insurance pieces specifically? Again, just anyone from the reinsurers who wants to speak, so either SCOR, Swiss, or others. No. Okay.
Thank you.
Maybe a couple. I mean, yeah, it's sort of probably going to go a huge way, but I think a couple of things that would interest me is on the forecast. The model uses sort of the one-day forecast rather than the actual rainfall that's happening, and so it is based on that one-day forecast rainfall. I think it's something that I believe was commented on at the time, and we've got a long Excel sheet of all the questions that came in at the time of trying to place the product, and there were many, and that one crops up a few times. So if there are any thoughts on that as we continue, just maybe add comment in the chat or in the Q&A. I can't actually see at the moment, so let me grab them up just so I'm not missing anything. Okay, no, that's perfect. And then, so I'll just jump finally onto the slide. I'm not sure we're going to get much more, so probably look to wrap up the session relatively soon. But I think the other piece that we're interested in, just to make everyone aware, is on climate change, how climate change is impacting the market, both from the model's perspective, and I know I've spoken to a number of the modelers who are on this call about some of those pieces, and actually owe quite a few of you responses. But it's interesting from our side, especially from the SEADRIF board, how climate change is impacting, and also the pricing that's being seen for policies, and whether actually it's going to mean that reinsurers look to move away from some of the sort of places that have traditionally been areas of high insurance and high growth to some of the other parts of the world, and whether that actually is potentially beneficial for SEADRIF and insurance in the ASEAN area going forward. I will just leave it open for 2 seconds, just to see if anyone wants to make any comments on climate change, especially maybe from the modelling side, if there are any thoughts on some of the climate change modelling that's happening at the moment.
I can throw something in there, Alistair, just
Thanks.
from JBA's perspective, I suppose, and where we are, which is this is very much a prime issue for us, I suppose, now in terms of our development, and where previously we've focused on relatively small areas. So we've in the past developed a climate change flood model for the UK. We're now looking at expanding that significantly and looking at implementing the same sort of thing within our global flood modeling capability. So I think we recognise, as a lot of people do in the market from a lot of different applications, that this is, this has gone right up the agenda. I mean, it was quite high up the agenda anyway, I think, but now this is a question that's being asked in a lot of different contexts for lots of different reasons. I guess it's interesting in this context with SEADRIF just to think about how that information would be used, where you're looking at at a scheme that's running for 3 years, and I guess it's probably unlikely that you can pick out any sort of discernible climate change signal in that period, what that information would be used for, but it would certainly be possible to provide that, even if it was perhaps a sort of more a static assessment of how things might change in the country in the coming decades. I'm just wondering how that would link into what would be done kind of on the ground day to day. I guess one thing that might be possible, and a question that's often asked, is whether that climate change is already being taken into account in the modelling that's being provided.
Sir, I wonder if I could respond a little bit to Paul on that issue. Would that be appropriate?
Yeah, please do.
Paul, I think your point on timeframes is a very well made point, and how that's going to affect pricing over timescales is, I think, a very important point. But from when you ask about the sort of the usage, I think one of the things that SEADRIF will be thinking about is, when we're talking to the countries, really how much we think we're going to be able to rely upon reinsurance, and trying to think in a very difficult environment, but trying to think about what kind of stance we think reinsurers are likely to take as a result of climate change. For example, are they going to look increasingly at increasing retention levels? Are they going to look at exclusion clauses, whether that be geographical exclusion clauses or whether that be type of risk exclusion clauses? For example, if one were to think that that was going to be an increasingly difficult environment, you might think there's a stronger argument to be made for the benefits of pooling risks and retaining risks within sovereigns rather than transferring risks. And that kind of balance might be affected by what view one takes. I'll stop there.
Thanks, Gary. I just say I've noticed that a couple of hands up. I don't know. So Michael, let me come to you next as your hand is up. I might have missed it. So apologies if I did. But let me, if you'd like to add any words, please do so.
No problem, actually. Yeah, I had my hand up already longer on, but no problem. No, but there's new stuff, actually, I can comment on. I think the climate change, topic, is really not an issue for a 3 years product. The pattern will be only visible, actually, in the very long term. I just I want also be caution, actually, our view on reinsurance lack of appetite due to complexity of model or so. Like it's not the case, like the reinsurance industry has a lot of appetite for risks stemming in particular from emerging markets, actually, where these perils are very well diversifying actually the peak perils actually reinsurers have on their balance sheet. So there is a lot of interest from the reinsurance sector and a lot of appetite actually from the reinsurance sector to take these risks. I think the pooling is rather a question actually of getting the best value for money actually for the countries that are involved. Like by pooling the risk, they can diversify actually the risk pool, and in the end actually the reinsurance that they might actually want actually to mobilize comes at cheaper prices, cheaper premium level. I just think like that also, like we should not get lost into a discussion actually on let's say improving some elements of the model and so on. Like I think like that we should be also like very ambitious in terms of trying to develop further the scheme to a situation where we might be in the position to settle on EO image or satellite image actually only, in order to reduce the basis risk actually for the protected governments, and to use actually the model itself, like as a way to overcome some of the issues that were addressed beforehand about the lack of historical, actually, let's say, remote sensing data that is informing about the flood extent, like to approximate it. And I really think that there are really no limits actually that are coming from the model. There are no limits that come from the climate change. It's just about actually growing the number of countries actually that are participating in SEADRIF, pooling that risk, as well as adding more perils, as was already mentioned by the representative from the PDR Laos. And I think then you will trigger a lot of interest from brokers, from reinsurers, actually, that will be all more than willing actually to support the further improvement of the underlying model. They will share their views actually. They will be bullish about the provision of their reinsurance capacity. So I think it's a huge opportunity here. The critical point is actually to get it now grow actually, and to get SEADRIF to develop more momentum, to include additional countries, to maybe benefit from the fact that in the Philippines the public asset scheme is not coming to the market as it seems. So and I think I just wanted to repeat, like that we are more than willing, actually, certainly alongside Guy Carpenter, to support this process actually of supporting SEADRIF actually to grow.
Thanks, Michael. Yeah, good to know your thoughts. And I think just to say on the sort of longer term piece, and you mentioned the public asset, I think all of that is still under discussion, and potentially has legs down the line. But at this point in time, we can't be sure whether it will or whether it won't.
I would just one more point. Sorry, actually, Alistair.
Yeah, go for it, Mike.
I think it's not only that the reinsurance sector has shown its willingness actually to support these schemes. Like in the context of the IDF, actually a number actually of insurance companies are currently driving complex projects to reduce the protection gap in emerging markets with a lot of actually resource input. And but it's also that there are new actually buckets of funds available for financing premium from countries such as Germany. So I think it's really like a very good moment actually to use all these different elements actually to bring them together and to try actually to grow the very, very attractive, interesting SEADRIF scheme. Sorry.
That's great.
No, that's good. And yeah, as you know, we sort of work with a number of those schemes and are in touch with the variety of governments who provide sort of different premium financing methodologies or others. Gary, was there something you wanted to say? Otherwise, I've got another hand up, so I'll go to them.
Sorry, Alistair. Justin Ward from Guy Carpenter.
Yeah, Justin, go ahead.
Just a couple of things based on Michael's comment. I think our industry is good at tinkering and addressing known knowns. Where Cdrif and in particular our parametric product wins is that we start to address the known unknowns. But I wouldn't like us to see us as a group reverting to tinkering and addressing the known knowns. So I think we've got to have a very forward-looking view on the SEADRIF product set in the first instance, and the geographies that it potentially covers. So that would be my first point. The second point I would say is that EO is here to stay. And it was one of the great innovations in the product design. I don't think we're turning back from here. It was more a question around validity at the time. So EO is here to stay. The third point I'd make is that we've got to build models and we've got to use data that is fit for purpose relative to the product design. And if we think about the product we have today, the underwriting basis risk is extremely low. And it's extremely low because the stochastic model is linked to the trigger mechanism as displayed in the fundamental tool. So once underwriters understand those dynamics, it's not about matching it to their own hazard maps from previous events, etc. It's around understanding the dynamics of that stochastic model, what is in and out of that stochastic model, and how it makes the link to the the product trigger and how that's displayed in the flood monitoring tool. So I think they're really important considerations to have here, have on the table as we push the concept of SEADRIF and the concept of this SEADRIF insurance company forward and start ticking off on our long list of perils by region where a significant insurance gap exists today. Does that make sense?
Yes, it does do totally from my side, and especially your second point, I think it's probably what Kath was trying to say earlier, and definitely something that she and I spoke about a lot, was that basis risk being very low because of those points. Maybe just aware that for your first point, you're sort of cutting in and out with the Wi-Fi. I'm not sure if all participants heard it. I didn't, so it might just be good to reiterate that quickly. Apologies.
So was that around the EO being here to stay?
No,
Alistair,
sorry.
It was the point before? Yeah. So it was really a contextual point around what our industry is good at tinkering and trying to fix not knowing. And we don't want to get ourselves in a stage where we're doing that with the Cdrif product, as opposed to attempting to problem solve around the known unknowns. So that's an important consideration here, and it really links into that fit for purpose model development piece. Does that make sense, Alistair?
Yeah.
I think Gary's putting his hand up there, so he may review or support my comment.
Gary, did you want to make a comment on the back of that, and then I will go to Takayuki. Gary, you're muted. Let me just unmute you a second. Okay, you're unmuted now. Or not.
Have a comment? No.
Now you can. Go for it.
Okay. No, I didn't have a comment to make. No.
Okay. Grant, that's easy then. Takayuki, maybe if I go to you now, because I think you've had your hand up.
Thank you so much. Maybe let me share some small comments. Basically, I agree with the comments by Michael, but I'd like to share the three ideas. First one is climate change is still a matter of the time horizon, as Gary mentioned. So it will be quite fatal for 10 years time or maybe 100 years time. But basically, insurance scheme tend to be a 1 year time horizon or at the most 3 years time horizon. So there's a chance for us to review and change the terms and conditions so that the scheme itself will be more sustainable. And the second point is still insurance exposure is highly exposed to the Europe and the US. And if we consider maybe Japan, China, and some other big countries only, so that maybe Southeast Asia regions exposure itself is still limited. From the viewpoint, from global insurer and the reinsurance viewpoint, this scheme would, how can I say, contributed to the global diversification of the portfolio of insurers and the reinsurers. So there's a high chance that the insurers and the reinsurers can consider Cdrif insurance scheme quite seriously to diversify their portfolio. That should be their benefits. But still, we need to consider the insurance scheme itself fulfill basically the expected loss, we need to have a proper pricing. Otherwise, we can't make it sustainable. So that will lead to the third point. You also mentioned some question about how insurer consider the discrepancies between the modeled loss and the bearing cost. That is quite key questions, I think. Yeah, definitely, we always study the models once we saw the new models by using some back test, so that we will consider historical events to check whether the model is reliable or not. From that viewpoint, bearing cost is still quite important for insurers and insurers to evaluate the program itself. So if there are any big differences between the modeling loss and the bearing cost, maybe we should consider there should be something we need to further consider. From that viewpoint, we still need to take a look at that bearing cost and back test. And that will give a good insight about how the model is reliable. So that's it from me. Thank you.
Thank you very much. Yeah, all good points and good to know. Just aware of time, so maybe if I think Kathy has got her hand up, so Kathy, let me come to you, and then we'll see where we are at that point in time. Just unmuting. Yeah, you're unmuted now.
Thanks, Al. So I really just had two comments. I guess one on the climate change part, and whilst I completely recognise that it's about a 1 year or a 3 year time horizon in terms of writing it, the question really for modelling is not about the next year, it's whether the time horizon on which you built your model has been impacted by climate change. So it's not really about next year or the next 3 years. Yes, the climate may not change much over the next 3 years in a sense, but if you're using data from the 1970s, it's where the climate has changed over the past 50 years. So there is a little bit of a disconnect between, yes, insurance policies are written over 1 year, 3 years, maybe up to 5 years in some case, but it's really whether the data that you are using in order to create that model is from the same climate. And I guess as we look over, particularly maybe as you look over the US, where you have more data going back from the 1900s, that's where some things are starting to question. Perhaps under this case, given that we only use the last 35 years of data, it is not quite the same. But I guess that's where really the question is whether people, when they are bringing in a data that is from the last kind of 40 years, and so it's been built on that climatology, whether underwriters are starting to add in that change. And I think that's really the question, which is a little bit disconnected from, yes, it's a short-term horizon for the actual insurance policy. And then I think my kind of final point would be, a lot of this has been around, perhaps slightly skirting around the key question here, or, maybe because I've left the World Bank, I can say is, you wrote it, that's absolutely fine, but the multiple was pretty high. And I think we all know that. And so it's really around, it's great that reinsurers are willing to come in and fill the insurance gap, the protection gap, but that's only useful for a country if they're getting good value for money. And so, that's really the question here, is not what's going to make the model better in a kind of just absolute sense, it's what would get you to have written this at a lower premium multiple. And I think that's really the question here. Maybe, as I know that there's a plan hopefully to have individual discussions with reinsurers, how much of that premium multiple, which I completely understand it, the burning cost difference between as we said, the burning cost versus the modeled cost, how much of that was what led to the price increase? How much of it was the uncertainty? And I guess that's where, if we go to the idea of saying, let's do an EO only kind of trigger, how would you price on that? You don't have 30 years worth of data of EO to go with kind of how you'd price it. So, it's not an index based where you could say take 30 years worth of trim data and just do a rainfall payout. So how would your underwriters price on that? And therefore, how would it look on a kind of premium multiple basis? Because whilst it'd be great to advance the technology, and it's fantastic to see it in so many places with EO coming to the front, ultimately, from the World Bank's perspective, we want Laos, I keep saying we want Laos, and the World Bank wants Laos, Myanmar, Cambodia, whoever's involved, to get a product which makes sense for them and is good value for money. And whilst all that premium, yes, is maybe coming, as was mentioned from Michael, it could be Germany, it could be the UK, it's still the country paying for it. That money they could use for a different product, could use somewhere else. And so I think what I'd ask here is, it's great that reinsurers have jumped over and said, we're really willing to support these types of products. But now what would be the next bit to kind of make it something that is, you know, the insurance premium multiples that are similar to what you might see kind of on a US parametric or modeled loss product. And so I think those are the things that as you move to having individual conversations, perhaps with the World Bank, where was the uplift in the multiple? I mean, it was never, you know, I think we understand it a lot, but what would be the key drivers of that? And I guess ultimately from the modeling perspective, is that where the team should focus first to get the multiple down on this product and then look to saying, right now, how do we push everything forwards? So I guess they're the kind of areas that I would just, you know, from my side, was always really interested to understand if there was a single thing that would have dropped down that kind of premium to give more value for money for the countries, what would that have been? And yeah, hopefully that'll come out in some of the future discussions, but it's been really interesting to hear the feedback today.
Great. Thank you, Kathy. And yeah, from my side, thank you for saying that. There's definitely sort of what we're trying to get to here is this multiple and how we bring it down. And, you know, as you're all very aware, especially as I've been in touch with a number of you on different country products, this isn't only related to Cdrif. This is related to all sort of the World Bank works, and in this case in particular, we're just discussing Cdrif. But it is great to see through the brokers, sort of the reinsurers really interested in this space and willing to accept risk from these countries. But definitely, as Kathy says, is the questions we get a lot are, you know, why should we spend the money on insurance when we've got all these other things to spend money on? I'm currently in Nepal, sitting staring out my window at the Himalayas, and I'm being asked those questions by the government here. So it's definitely a case of, you know, making sure that one, you know, the understanding of insurance is there, but then when it comes to pricing and the multiples, that from the World Bank side, we understand really what's driving that multiple, so we can make sure that the models that are developed by countries or the information that's provided to the market is going to be as useful as possible and enable the market to be as confident as possible in the price, and therefore, you know, we know that there's going to be multiples, and in certain areas, because of the variability models, they're going to be higher. But make sure that we're all on the same playing field as to how we can drive those down over time through using additional data or improved data sources or whatever that is. So yeah, just thanks, Kathy, for bringing it up, and it's a good one for everyone to think about. I'm going to close in a second and hand over to Gary for closing out. Just from my side, before I do, you should now all have my email address. Please do get in contact with me after this session if you'd like to make any further points that you weren't happy to in the group setting, or if there's anything else that you think it'd be useful for myself to know. I'll obviously pass around the team. The other thing just to mention to everyone is it would be good to understand going forward how each of you would best like us to sort of work with you on further development going forward. Are sessions like this useful, where we can get everyone together and have a discussion, or actually would it be better if we split it up into individual conversations, or should we have the modelling part separate to the insurance part? Or any thoughts on any of that would be very useful from my side and the World Bank team side, because I think the more we can understand the best ways to engage on this, the better place we're going to be in. And yeah, that's probably everything from me. If there's anything else anyone wants to say to myself or ask them, please do put it in the chat and I'll respond there. But in light of the time, I will say I will just hand over to Gary to close us out as a session.
Thanks, Al. Well, I just want to say thank you very much to everyone. But I thought it got really interesting towards the end. My first takeaway was tremendous encouragement, really, to hear so much positivity from the reinsurance market, and particularly Michael really took on board what he said. And it does seem that from a technological point of view, there's so much going on that really it opens up so many opportunities. So there I was sitting there feeling incredibly optimistic, and then Kathy put much more eloquently what I was trying to say in answer to Paul, and really a sort of a bucket of cold water put on our heads, very necessary, I think, and a very eloquent challenge for us all to think very carefully about what is really driving multiples, and what is really driving pricing, and how we can really provide the products at an acceptable price to the countries. And then my final comment really was, again, picking up, I think, really what Michael had said so eloquently, that momentum is the key. And that's a challenge to all of us, how we can really get momentum into this process. So once again, thank you so much. I certainly found it extremely informative. I hope Al got something, quite a lot from it, pointers for how we're going to proceed in the future. And again, thank you so much.
Thank you, Gary, and thank you, everyone. Thanks for your time. Well, it's taken a lot of time, and yeah, just reiterate, please do reach out to me, and I look forward to having meetings with some of you over the coming sort of months as we progress this. Thanks for your time, and yeah, everyone, feel free to leave.